Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, and even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, all we got really was industrial production. Now, industrial production kind of is a gauge of industrial manufacturing in the European region. This also kind of strips out Germany and France, which makes a better part of half of the Europeans' industrial production. But having said that, without Germany and France in this mix, we got a negative 1.7% on industrial production. Was supposed to be a positive 0.3%. So a big miss on that number. Also, they revised last month's number down slightly from 0.2% to 0.1%. Not a good trend that we're seeing out of that number from the European region, really signaling a bit of a slowdown. Also, we're starting to see a lot of Fed governors like Yellen expecting that the Fed has is done, I should say, raising during this cycle. They're going to take a pause, it looks like. So we'll have to see if the rest of the Fed governors kind of follow suit with that, but it's looking like what I've been saying for some time, that they should be pausing. All right, on to the overall markets, because that's about it. It's a Monday, not a whole lot of economic data. We've got crude oil unchanged exactly, now down a penny, but for the most part unchanged on the day. It's right in that 50s handle, lower 50s. I was thinking it would be closer to the mid 50s, but it's in the 50 handle, which is where I'm expecting it to kind of settle down in and around this area until we really figure out what the economy is doing. Because if the economy is not doing good here or abroad, that means there is going to be a lack of demand for crude oil. Black gold, not the yellow gold like we're looking at right here. We've got gold futures right now up about $1.20. Still thinking it wants to test that 13 handle. It's tested it several times, which is really kind of making me second guess this thing, really wanting to trade into the 12 or 13 handle and getting out of this 1200 handle. I still believe it wants to roll, or it's going to roll over to the mid or lower 1200 handle. We're right now at the high, testing that 1300. I think that we may get in there, but it's just really not sustainable. Then we got the bonds. They're going to be coming off as we start hearing some of these Fed governors talking about the interest rates not going any higher, although bonds are pricing in actually interest rate lowering in a sense, which is why bonds are moving higher. As bonds go higher, that means interest rates are expected to be lower. So that being said, it's priced in with the bonds. Fed fund futures, I'm sure, are sliding right now. I haven't checked those in a while. VIX is moving higher. Haven't really gotten into that 20 handle today, but we are trying desperately, probably, as the equities are a bit of a mixed bag at any given time. Let's take a look at the Dow Jones Industrial Average. As you can see, it's down over 100 points right now, very close to where we opened on the day. But we talked about this last week. We could see this start to slow down on momentum. After we get this big slam down, we start seeing this momentum slow down. I'd like to see a little bit of curl over and then a resumption to the upside, because that would give me show me that some of those weak hands are getting out of the market, which is really significant when you're trying to find bottoms or tops. All right, NASDAQ also in negative territory. Again, we are on the highs of the day right now, or actually, no, we're off the highs of the day now. We were not too long ago very close to that. Starting to roll over a little bit. All this that acted as resistance, the value area low, and these Fibonacci's are all acting as support now. One thing to get the NASDAQ would be this overhead resistance area. We got a lot above us, which is why we're starting to see some of these equities start to roll over, which is fine. Maybe a rollover down to this Fibonacci extension would be a nice area. Maybe even the value area low before we start bouncing back up. any one of those scenarios, making that bottom that we've already seen a solid bottom is really what the bulls are looking for out of this chart setup. Again, E-mini S&P is not a whole lot different than what we saw in the rest of the charts. They all kind of line up together. But you can see with the E-mini S&Ps overnight, we started getting a little bit short, flattened out, then into today's market session with most of the rhetoric, I think, coming from Yellen, really the catalyst to make this market move higher and near the highs of the day. Remember, Yellen basically signaling that the Fed may be done with interest rate increases. That would be a move higher. That's what the equities are looking for, that easy money for a longer duration of time. All right, over into what the trades that I've been doing. GDX. Now, you remember on the 28th of December is when I first started putting this trade on, right around here. And I decided to go in there and sell the February 22.5 calls, because the idea here is that if equities go up, it's going to cause downward pressure in the gold futures, which is leading us to the GDX, which is the gold miners ETF. All of those things being equal, the gold miners should follow the gold if gold starts coming off. So that's what I was expecting for this GDX. But what happened was, as you can see, I put this on the 28th. I got the wrong directional move. Volatility really didn't come out of it. It actually started expanding on me a little bit. So I decided to add to that because my market assumption hadn't changed whatsoever. I was still in the camp that I thought that equities are going to move higher and gold would start to roll over. So I added a little bit to that trade on January 4th, which was just not too long ago, just a few days ago, as you can see here. Market direction going against me. Volatility started coming out when I added this in, and I did it as a half a tranche. I didn't add a full tranche to this. First tranche was a full tranche. Second tranche, I did it as a halfie and went into the February, sold those same 22.5 calls, this time for 50 cents. So just slightly better than what I originally got in at, and bought them back this morning for 21. So completely out of my GDX trade, added a little bit, went a little bit big, but with that volatility coming out and today's market directional move, all of those things coming together for me to allow me to get out of that for a little bit better than 50% of my max profit. And then, which is my target there, Macy's. Remember, right after their big news of the holiday sales not going so well and all of that stuff, I said that that market was going to continue to slide with that news out there. If we can get the volatility to come out, that would be nice as well. So in Macy's, I went in and, sold the February 29 calls in there. Originally for 50 cents, was able to buy those back this morning for right around 23 cents. So still directional move to the downside, directionally in my favor. Volatility, as you can see, came out quite a bit over the weekend, which helped out dramatically to allow me to get out of that easily for 50% of my max profit. Friday, it was a little bit higher than that. Today with the market continuing to move down, volatility to continue to come out of that, and the theta helping me out over the weekend as well. All of those things coming together to make that trade a winner for the most part. Or actually, it was a winner, except for a couple of days there. It was a little bit tentative maybe. All right, Lulu moving to the upside. I got out of these puts. Remember, this was some of those things. This was one of the few things I had on, or have left on, that are delta long for the most part. I've been adding some delta adjustments. Those haven't been winners yet, but are working nicely. But with Lulu, I went in there and sold the February 110 puts, because remember, I talked about this. It was right after Macy's coming out saying that their holiday sales were terrible. I said that Lululemon had packed stores with no sales whatsoever, so I was playing them to the upside. I think the word's gotten out, and Lulu pushed to the upside, allowing me to get out of this. Also, volatility coming out, directional move to my favor, theta decay over the weekend. All of those things worked out nicely for me. Those February sold the 110 puts in there, and I originally sold those Lulu puts for, I think it was like around $1 or something. The Lulu I sold for $1.10 and bought those back for 38 cents this morning. So a little bit, again, better than 50% of my max profit, but that theta decay over the weekend helped me out quite a bit, and volatility coming out as well. Volatility is going to come out when we start seeing these markets push higher. Usually that's the case. If it's not, then that's usually a bit of a red flag. But this worked out quite nicely, all three of these trades. And we've got 2019 off to a good start so far. All right, today we're going to be working on some earnings trades, right? We got the only thing that I'm really going to be looking at is Delta Airlines. I haven't decided if I'm playing this the upside. I think with the gas prices being as low as they've been throughout this last quarter, that it's going to actually help them with margins. People probably, at least I've seen on the airplanes that I've been on, I've been pretty full. So I think that the airlines will do all right. I don't know if they're going to be knocking it out of the park necessarily, but at least a play to the upside I think will work. Again, with JP Morgan, I think I'm going to play this to the upside as well. The banks have extended to the downside more so than the broader market. So I think that they are even if they don't come out with great earnings, they could see a bit of a pop just because they are way oversold at this point. So JP Morgan most likely playing to the upside. And that's about it. There's about 5 other ones that are coming out, but I'm not going to play those. Most likely just JP Morgan and Dallas. That's about it. All right. Hope everybody had a great weekend. And as you guys are ready for this earnings season, because we are just getting into the thick of it. Now, if you guys are watching my webinars right now, they are on high volatility, but I'm not building them specifically around earnings. If you want to trade earnings using options, you need to check out my earnings with options webinars. All right, so go to Pro Trader Strategies, sign up for those, as I'm going to be talking mostly about how to trade options in and around these earnings for the next couple of weeks. So check that out so you can get ahead of it. So it's more of a refresher when you hear me talking about it in the daily market commentaries rather than learning it new. All right, that's all I got for you. If you can't take that, take it easy.